Hey everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing. And I want to call this one Clueless Tesla Analysts because, you and I have been doing earnings calls on Tesla for years. And I always expect that the next day, the stock's not going to do what you expect it to do.
We've learned that.
But this time...
That's not based off of any logic. Let's just be clear.
This time, it dropped 12% the next day. And I shouldn't be shocked because I've seen it happen so many times. But I'm just like, what? So after the Tesla Q4 earnings call last week, Jesse and I did our review as we always do. We're talking about the highlights from the call, things that interested us, etc. So go check that out over on our Now You Know channel.
And like what happens so often, the next day, Tesla stock tanks, no matter how positive the earnings call seems to us.
I mean, I'm no longer surprised. I'm no longer befuddled by it. I can expect it now. And I think that this report that Dan Ives, a financial analyst from Wedbush, just put out called Tesla Can Rebound with These 10 Things gives us insight into why Tesla stock always reacts differently from what I think is actually going on.
The day after the earnings call, Dan Ives said, quote, "This was 101 how not to do a conference call."
So let's go through his 10 things and get some insight, shall we? Number 1, he says, announce a $10 billion share buyback with roughly $30 billion of cash on hand. Walk the walk, not just talk the talk, and show confidence to investors.
Number 2, create an X holding structure that will include AI initiatives, Dojo, Optimus, Full Self-Driving to give Musk more control and could get him to the roughly 25% voting level.
Number 3, stop the price cuts now and maintain margin leverage over other auto players.
Number 4, hold an AI day before the summer timeframe so investors can better understand the goals for Dojo, Optimus, and Full Self-Driving.
Number 5, get outside capital for X Twitter with assurances of no more Musk stock sales.
Number 6, new comp package with the proxy to lock in Musk as CEO through 2030, along with the settling Delaware legal issue holding things up.
Number 7, hittable production delivery timeline for Model 2 and the sub $30,000 vehicle in 2025.
Number 8, with Zach, former CFO, gone, conference calls have become a horror show. Return to formal guidance and goalposts and make messaging changes on calls.
Number 9, do an aggressive AI acquisition spree and bring in outside capital to build out the AI component of Tesla, about $30 billion of cash to fund deals.
And number 10, give long-term targets around AI revenue to the Tesla ecosystem. We believe Tesla could be the biggest AI company in the world around full self-driving, autonomous, Dojo, Optimus, robotaxis. Give this key AI framework to the street investors.
All right, so to start off, I will agree with point number 8. Former Tesla CFO Zachary Kirkhorn seemed to understand how to communicate why Tesla did certain things during the quarter in kind of financial speak, and he was able to better communicate upcoming forecasts, again, in financial speak. It was kind of like he was Elon's anger translator.
I just want to reiterate our unflinching support for all people and their right to a democratic process.
Hey, all y'all dictators out there, keep messing around and see what happens. Just see what happens. Watch!
Tesla's new CFO doesn't really give much context, as was evidenced by the one-time non-cash tax benefit of the $5.9 billion recorded in Q4 for the release of valuation allowance on certain deferred tax assets.
That should have been explained and put into context better because none of us in this world have seen numbers like that. We've seen when you switch over to a different accounting method of, $60 million or something like that. But $5.9 billion in one quarter is a lot of money to have to explain, and it wasn't really well explained. And I've got to guess that if me, who's been investing for 40 years, didn't really understand it, that most retail investors didn't understand it. And you might be like, well, institutional investors understood it. Maybe they did. Maybe they didn't. I don't know. But it's important for everyone to understand it. And I think that's the point of an earnings call. When something this big comes up, take your time and explain it. Don't just keep repeating kind of the same line over and over again. But I do want to kind of plug mainstreetdata.com, by the way. We've been talking about this company a lot over on our investor club. This is a really cool website where you can see visually a lot of this data about stocks. I want to show you this chart right here, which is the GAAP net income for Tesla. And again, you can see this huge quarter, right, all of a sudden. Kind of what I'm showing here is that you're seeing this downward trend for Q1 through Q3 of 2023. I think, I'm not sure, again, I don't fully understand what this non-cash tax deferment was, but I believe we would have seen a much flatter first 3 quarters of net income had that been rolled into those 3 quarters. So I think the reason why this is so weird looking is because they were going through a different way of accounting for it.
And this might explain why they did what they did.
Right.
And I mean, the question is, does it really matter if we kind of should have all known? And if you had looked at, column 85B on your numbers sheet, and you would have seen that would have, that was going to come into play at some point. It's just for the average investor, when we're looking at, income and revenue, we're not typically paying attention to losses that were accumulated years and years ago.
Right. I mean, you would have gotten a much rosier trend. And I think that if you look at the stock chart also from MainStreetData.com, you saw this in the past year, right? You saw that Tesla kept bumping up against this like $300 price point or $250 price point, and it couldn't get any traction. I would posit that had Tesla been showing an upward net GAAP income, it might have busted out of that channel in 2023. But instead, it was kind of forced into following that net GAAP income price. And for a different, more bird's eye view of Tesla's net GAAP income, let's go to this animated chart from James Stevenson at I Cannot Enough on X. This is the cumulative GAAP net income to date.
And so it's cumulative, and you can kind of see the trend there where they're spending money, then they were spending a lot of money, then they weren't making any money and they weren't losing any money. And now they've started making a lot of money.
Well, again, this is net GAAP income. So they were spending a lot of money. They were also making a lot of money. But yes, they're building out gigafactories, and that's shown at the negative part. And now what's great is area under the curve here tells us a lot. We're seeing a lot of area under the curve here once they went positive. So analysts like Dan Ives want very predictable things, like his point number 1, right? A Tesla $10 billion buyback. I think this is a stupid fucking idea.
And I'll tell you why. You buy back your stock when your company couldn't do anything better with the money. Some big bloated company that basically makes something like cars, and they wouldn't know what to do with a few $1 billion. They go, let's give it back to shareholders. If that's the kind of shareholder you are, then please go invest somewhere other than Tesla.
Tesla can do amazing things with that $10 billion, like build more gigafactories. Elon has said this all along. They are production limited, not demand limited. And when full self-driving and the Tesla bots start coming, it'll become even more pronounced. So no, don't do a stock buyback, Tesla. Please do not. Use that money to grow and grow and grow. Build more megapack factories, build more lithium refining, build more gigafactories, hire more incredible engineers, build Dojo supercomputers.
And I get Dan's point number 7, hittable production/delivery timeline for Model 2 and sub $30,000 vehicle in 2025. Sure, it would be nice to get a firm date on the product releases, but you know what, Dan? Tesla isn't doing something that's been done before. They're doing things that have never been done before, so giving super accurate dates is just impossible.
Yeah, is Elon late sometimes on his dates? Mm-hmm. Yep, he is. Live with it. It's not like he doesn't deliver. He said Tesla would come out with a Model X with Falcon Wing doors. Was it late by a year? Yup. Was it awesome? Yup.
Elon said they'd come out with a more affordable Model 3. Was it late? Yep. Was it awesome? Yes, it was. It went on to become best-selling in so many categories and blew away expectations.
Model Y. A bit late, although not much. And yup, it has become the best-selling car in the world.
Semi-truck. A bit late, but it's proving itself to be a game changer.
Cybertruck. 3 years late, I admit it, but oh my God, it's going to change the pickup truck world. You just wait and see. To Dan's point number 9, do an aggressive AI acquisition spree and bring in outside capital to build out the AI component of Tesla. $30 billion of cash to fund deals. What the fuck are you talking about, Dan? Why would Tesla want to buy competitors when it has the best team already?
Just attract those smart engineers to come work for Tesla. And again, don't get all the engineers, just the smart engineers that want to work hard and think smart and get stock options in what is going to be an incredibly valuable company.
These financial analysts only know how to do what stupid corporations do: acquire companies.
It's much better to start your own. It's just that big corporations don't know how to do that.
Let Elon do what Elon does best. It's like saying Elon should have bought rocket companies when he was starting up SpaceX. No. Instead, he built an amazing team of over 1,000 people who now put ULA, Ariane, China, and Russia to shame.
And here's the thing that bugs me, right? Like, you have Google and Apple, and they'll hire all these engineers and then basically not put them to work and just pay them a lot of money so they don't go to work for other companies. Exactly. And you just kill your competition that way. And that's one strategy. I don't like that strategy because it sucks for everybody else on Earth. You have the smartest people in the world sitting in an office,
working on nothing,
playing with Nerf guns, going like, I'm Googling right now. And it's like, no, you're being wasted. You're being bought up and sold just to rot. Exactly. So that way you're not out there competing with these massive giants because they have all the money. Tesla doesn't do this, right? Tesla doesn't just buy up. They acquire some companies, But what do you see them doing with those companies?
Right.
You don't hear about like, oh, I got this job at Tesla and it's great. And we just kind of play around all day. No, everyone you hear who works at Tesla is like, I bust my ass off. That's what I'm excited about with Tesla.
And what about this one, number 4? Hold an AI day before the summer time frame so investors can better understand the goals for Dojo, Optimus, FSD.
We already know what the goals for full self-driving Optimus and full self-driving are. Do you not listen to Elon ever? Do you not follow his X account? Do you not know how to listen to earnings calls?
Are we the only ones who think Dan Ives must be asleep during the earnings calls? Elon said Optimus will be the biggest product ever. What? Do you want Elon to draw you a chart? Dan, do you want a PowerPoint presentation? Can you not look at what Elon has done so far? Do you have no idea how to extrapolate?
Do you not know what a robot is? So Dan, what you're looking for is a boring CEO who hands you low targets that the company hits every quarter.
So here's my advice, Dan Ives and others. Stop following Tesla. It's obviously not in your wheelhouse. That's to put it nicely. Go follow some companies that provide you with charts and quarterly guidance.
Honestly, Tesla gave you guidance. For 2023, they said they'd probably produce and sell 1.8 million cars, and they did. Is that not good enough for you? Everything they've done so far, they said they do, and everything has turned out far better than anyone could have possibly imagined.
Gigapressing a vehicle body in 1 or 2 big chunks.
Never done before.
48-volt battery architecture.
Never done before. Steer-by-wire.
Never been done before. 4680 structural battery pack.
Never been done before.
Rear wheel steering on Cybertruck.
Sure, GM did it first with the Hummer EV, and there was one before that, but you can hardly call it a mass production vehicle.
The Tesla Cybertruck is going to become the world's best-selling pickup truck, mark my words. Highest production auto plant in North America at Tesla's Fremont factory. Meanwhile, GM and Ford are downsizing and closing factories, but you don't talk about that after the earnings call. Tesla is going to be producing some of the most amazing products on Earth that humans have ever seen. Self-driving cars and autonomous humanoid robots. Not to mention the amazing products that they're already making: solar roofs, Cybertrucks, electric semi-trucks, the safest, coolest, most efficient, best-selling EVs on the planet. And let me just go back to Cybertrucks again. If you can't see that Tesla is going to be the most valuable company on the planet, then you should definitely not be an investor, and you should find some other work if you're a financial analyst. Now, I'm not picking on all the financial analysts. There are some smart ones out there, of course, like ARK Invest. They get it.
In fact, right after Tesla's share price started sliding over 10% after the earnings call, who was picking up more shares? Cathie Wood and ARK Invest. They loaded up on more than $5 million worth of Tesla shares.
While Dan Ives is lowering his Tesla price target from $350 to $315, Morgan Stanley's Adam Jonas reiterated his $345 price target. New Street Research lowered their price target on Tesla from $300 to $255. Canaccord Genuity also lowered their price target from $267 to $234. Oh, and JP Morgan lowered their Tesla price target from, get this, $135 to $130.
Meanwhile, ARK Invest's price target for Tesla is $2,000 per share by 2027.
Now, disclaimer, we're not financial analysts. Don't take our talking about Tesla or any other company as financial advice. Do your own research. Investing involves risk. But ARK's price target makes way more sense to me because they actually factor in all of Tesla's disruptive technologies into their price model. Whereas these other bozos barely understand that Tesla is anything more than a car company. ARK, on the other hand, knows that FSD, energy, insurance, and robots are all going to factor even more into Tesla's bottom line in the next few years than just its EV business. Somebody's going to be proven wrong, and somebody's going to be proven right. We've been following Tesla every week for the past 9 years. And if you want to join a group of investors who get it, then consider joining our Patreon to get the Investor Club perks, right? We have Investor Club bonus stories every week. We have our Investor Club Slack where we can all share ideas. And we have exclusive Investor Club live streams with CEOs and founders of companies so that you can ask questions directly. There's nothing like getting to hang out with the smart kids.
Now, one final thought here is to kind of create an analogy to talk about financial analysts. So famous chefs who've worked in commercial kitchens their whole careers, when they're talking to you about how to cook, they really stress specific skills that got them through culinary school and have led to their success running restaurants. Things like knife skills, being able to chop up an onion in 30 seconds, or mise en place, getting all your ingredients ready to go in little separate bowls before you cook. And then they try to teach you these same skills. But here's the thing. You're cooking for yourself and your family. You're not in a large commercial kitchen with a large industrial dishwasher and a guy who's going to do those dishes for you. Many of those skills that they're going to teach you aren't that useful in a home kitchen. The The things that you're more likely to care about in a recipe are how much of a mess did you make? How many pots do you need to clean? And how available and shelf stable are the ingredients? That's not to say that a chef is wrong, but they're not doing the same thing that you're doing. And therefore, they're giving you pretty unhelpful advice that is still true. Now, the same can be said for financial analysts. What makes a successful financial analyst?
Picking stocks that do well.
When? What time scale? Do we judge a financial analyst by how good a stock recommendation they made 20 or 30 years ago?
No.
No, it's quarterly, because of course not. We can't. Otherwise, it'd be like, well, you're 85 years old now. What? And you did such a great job. What are your next stock tips? I don't know. Right. We can't do that, right? So a financial analyst has to prove themselves quarterly. And so why do you think quarters matter so much to an analyst, right? It's their little report card. How did I do? Let's update my metrics. I'm so great. And they're working every day to come up with the latest reports. Let's talk about you for a second. What do you do? Maybe you have a 401k, maybe you have a Roth, maybe you just have a Robinhood account. You each have different goals for what you want your money to do for you. But a lot of you have a pretty long-term goal waiting for you. Retirement. You're not trying to get every quarter to be perfect. You just want to maximize your investments with as little effort as possible because you're not a financial analyst and quarters shouldn't be that important to you. It's just like a chef. What an analyst is trying to achieve isn't the same thing that you are trying to achieve at home. You're not giving reports to your significant other every quarter. You're just trying to maximize your retirement at the end of 20 or 30 years.
So you're saying that following the analyst is stupid? But isn't it their job to give you financial advice?
Well, here's the thing. If you ran a hedge fund or you were an analyst for one, then that would be your job every day, analyzing stocks. I mean, besides sucking up to your boss and playing golf. But you would have some degree of this is my job and not this is my entire life savings, right? And critically, you wouldn't have another job to do every day. You would just have, I'm a financial analyst. I go to work, I come home, and I get to have other hobbies and fun skills. Therefore, the amount of stress that you already have on your plate every day, plus the fact that you're playing with your money, makes every transaction that much more stressful. That's why Zach and I aren't financial advisors. It would be so stressful to have to deal with this on top of all the other stuff that we deal with every day. And this is why I'm so excited by a disruptive company like Tesla, because long term, they're looking great. Now, short term, the analysts have to justify their jobs and wring their skirts every quarter. I want to be able to, in some sense, sit back and let Tesla, I hope, 10x again in the next few years when they hit some of these amazing goals. I don't want to have to worry about every quarter and be like, oh my God, should I sell? Should I buy? Should I, day trading's fine. But I just don't think that should be on top of your day job. It seems like way too much work to me.
I just also think, though, that if you have any experience with Tesla earnings calls, you know how to hear them. And you know that they're not like a traditional company because they aren't one. And so instead of every quarter saying, well, I didn't hear him say the right thing about growth, but he talked about so many other amazing things that you just chose to ignore. When the Model 3 and the Model Y were coming out and it was all about, well, what's, how many cars are you going to make this quarter and how many that quarter? Well, looking back, who cares? It became the best-selling car in the world. Cybertruck. You notice they didn't even ask about the production of it. They almost ignored it. Well, why? It's going to be one of the best-selling products probably that Tesla's ever made. Elon said that.
Because they need to go and make a quarterly report to their investors, to people who honestly, and totally makes sense, right? I don't want to have to deal with the investing, right? And so I just want to make 8% a year. And then, of course, there's going to be 1 year where the market tanks and I lose all of my gains. But whatever, that's what I want to do with my money. And I hand it over to these dudes who are going to look at everything quarterly. And we're analyzing everything every day. And you go, wow, my money is being so well taken care of.
What's amazing to me is Elon gave you a yearly number that he hit. He hit the 1.8 million cars made. He did that back at the beginning of the year, right? So yes, he didn't give you a quarterly numbers, but he hit his yearly number, which is way more impressive. I'd rather know a year out what a company's going to do than know what they're going to do next quarter. Almost anyone can guess that.
Except for the analysts. They just care about the quarters. And that's why I actually like ARK Invest, because they have a 2027 target. So they're not a quarter ahead, they're looking about 3 years in advance. That's great because that's kind of giving us a little bit more helpful for the kind of person that we are. Because if I was like, quick, hi, well, I'm making a video right now in this stock right now, you should buy. And then, maybe in 4 months, you're going to have to sell it because it's going to go down. Like that is really stressful.
Right.
And I don't think is that useful to somebody who is trying to, take their retirement money most of the time, or just in general, try and make a lot of money. Not everyone is going to be able to buy or sell that day.
No,
you
that's
might
trading.
you might be like, oh, I'm going for a ski holiday. You don't want to worry that like, oh my God, I don't have good Wi-Fi at the ski slope and I'm not going to be able to sell my stock.
That's why we didn't call this channel Disruptive Trading. We called it Disruptive Investing.
It's long-term investing. That's what I hope we kind of bring a little bit of awareness to, that, Dan Ives might come out with like here's what I want because I'm a boring jerk.
And I would just say, take advantage of all the boring analysts that got it wrong.
Yes.
We're not financial advisors. We're not telling you when to buy or what to buy. But, I look to see when things are on sale. And to me, Tesla's on sale.
Right. Because again, I just look forward to all the amazing stuff that they're working on.
Yeah.
And I go, you look at Apple. Okay. Oh, we have an iPod and then it's going to become the iPhone. Wow. And look at the growth, right? Now we're going, oh, you know how you have to do work? What if you don't? What? That's different than a like, click, 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 ooh. The new U2 song, right? That's just different to me.
I know.
Thank you so much for watching. We'll see you next week on Disruptive Investing.